Alright guys, today we are going to do another smart money concept analysis. So let's get into it. Today I want to talk about drawdown. What's a drawdown and risk reward ratio that's preferred for this strategy? So the drawdown usually could be normally like 2% or something like that. Overall, I'm talking about overall drawdown. But first of all, you need to know that in each trade, you can risk 1%, yeah, or 0.5% if you are on funded account. But if you are doing some challenge accounts on prop firms, you can use 1% risk management and 1 to 5 risk to reward ratios. So the thing about this strategy is that, for example, the market is if it's trending downwards, like here, what you can do is that each time you see these spikes that comes up, right? You can mark these rectangles with it, okay? Mark it with the top two candles, anything like that, okay? And then mark it on the second one and the third one and like that and on, okay? But you don't need to mark it after like you see these kind of big drops because you know that this is like a supply zone and market is going to come back up to this level and you can short it, okay? But the problem is that especially in this gold market, right? Um, the controllings, the manipulation is quite high. The manipulation levels are quite high, right? So you will see most of the time that price might do come back up and hit your trigger your entry, your sell limit and stuff like that, and it will hit stop loss. Okay, you will see these kind of trades, but remember that this is just losing 1%, and then afterward you will see like price going back up, creating another smart money concept structure like this. This is very uh, textbook related. You will see price doing liquidity grab in here and closing above the previous candle, liquidating it, and you will see like there's a fake inducement in here and break of structure in here, change of character and then break of structure in here, another fake inducement, and price coming back to this level again. Okay, and here you can even see there is imbalance, so you can put a short in here. This is like very textbook related, and you can aim for 1 to 5 risk to reward ratio. Okay, normally it will be at this level where you will put your take profit. This will be working in many situations because sometimes price doesn't come back all the way to like these levels. 1 to 5 risk to reward ratio is good. So here you've lost 1%, and with here you've gained back 5%, so you're 4% up right now. So you're 4% up right now, and price came back to this level. You set your sell limit and your stop loss in here. Price triggered it and went all the way down to your 1 to 5 risk to reward ratio, like here. Okay, and you would have triggered your take profit, and you would be 5% up again. So this time you will be 9% up already. Wait a minute, 5 and 4 is 9, yeah. And then price will be going back up to your another level, okay? And it will trigger this trade, and you would be aiming for another short position from here. Risk reward ratio and should be 1 to 5. It should be slightly below this, like here. So this is what you're looking for. Um, and of course, if price came to this level, you can take profit in here. Okay, this is after all a liquidity level where you want to take profit. So the thing is that I want to say is that even if you suffer a loss, sometimes like in these areas, okay, do not give up on a strategy. Know that it will work in long term. So take the loss and be professional and aim for the second trade that's going to come afterwards, okay? So do your due diligence and uh, learn properly how the smart money concept works, and then apply the concepts on the trades and be patient. Like even if you suffer the first loss, the second trade, even if it's in a loss, and the third trade gets you like 1 to 5 risk reward ratio, you will still be up 3%, okay? So be patient, guys, and do more of these back tests so you can learn properly how it will work for you, okay? So even like at these levels, of course, like even in the bullish market, right? You will see like price going back up and coming back down to these levels, and you will be back into 1 to 5 risk reward ratio. And sometimes like these levels never got hit, right? Sometimes in future it's gonna get hit. So be patient, okay? And the same goes for the other ones, okay? Even these ones. But now what we're looking at is more like supply and demand zone trading. But I don't want you to be doing supply and demand zone trading because that's too much of beginner's level. I want you to be doing like more of professional trading, smart money concept trading. So, like for example, in these situations, you will see like the market did a liquidity in here at least. So you would want to enter a trade from the lowest candle in here, and you drag it all the way to there to get into this trade, okay? So this wouldn't be valid, but this would be valid. And you know, like with smart money concept, you know, if there's like what do you call this double bottom, like balanced bottom in a straight line, it is not considered a good entry level. But when you see like these kind of V shapes, you can always think like this could be the next level that you want to get in. So in bullish trend, take buy trades only, okay. But in bearish trend, do take some sells, okay. And like in bearish trend, my market likes to come back up and sell again. In bullish trends, it likes to come back down and go back up again. So stick to your rules, like even in here. Like if you stick to your rules, right, for first trade, second trade, third trade, you've still got plenty of opportunities, okay? Like in here, you would have got a lost, okay? First lost, second lost, okay? Doesn't matter. Then the third trade in here would have got you back into the profit of 1 to 5 risk reward ratio. So you lost 2% and you gained back 3% in here. Okay, so you got 3% in here and you mark this level once again, get back in here, start position. One to five risk to reward ratio. Wait a minute. Somewhere in here. Yeah, 1 to 5 risk to reward ratio. So you would have got take profit with this kind of wick, and you would have been like 3% up, 8% up, like right away. So even if even if you suffer two losses in the coming future two wins, you would have win your 8% challenge profit target right away. So guys, be patient, alright? Even in here, okay? Get into this new trade from here, this level, and you short it from here. Put a stop loss in here. 1 to 5 risk to reward ratio. This time you wouldn't have hit your take profit with 1 to 5 risk to reward ratio, but you would have been really close. And once you see like price reversing and stuff like that, I believe you would take your profit in here. So yeah guys, that's it, and keep practicing, keep becoming better, and this strategy is pretty much worth it for your prop firm tradings. And if you guys have any more questions, feel free to ask me in the group, and wish you guys all the best.